Alright traders, welcome back, and today we are diving deep into Pieverse for the first detailed analysis on this coin. As you can see, we are back on the chart, and the first thing I want you to notice is the way the market has been interacting with one of the key levels. If you missed our previous analysis, I highly recommend checking the link in the description so you can follow along with the context, because what we are about to break down is building on the same structure and previous levels. In our last breakdown, we identified a major resistance level that has now flipped into a support level around 36 cents. This level is extremely important because it has already shown multiple reactions in the past. When price first touched it, it acted as a strong barrier, pushing price downward, but eventually buyers gained enough momentum to break through it. This breakout immediately turned the former resistance into support, and that flip alone was a major signal for anyone watching the structure carefully. Now, when price returned to this 36 cents level after the breakout, we observed that it didn't reject perfectly on the first retest. In fact, the price came back and almost broke the support, which created some uncertainty in the market. That's a very important detail because it tells us that the level, while still key, is starting to show signs of weakening. The market is testing it multiple times, and every time it reacts, it leaves footprints that reveal what buyers and sellers are thinking. This is a classic behavior in smart money concepts. When a level is tested repeatedly, it either strengthens and validates the support or resistance, or it starts to fail, showing that sellers or buyers are preparing to take control. Looking closely at the chart, we can see that price came back to this level again, and on the retest, it finally broke through decisively. This means the market is trying to shake out weaker hands, which is typical behavior from institutions. They allow retail traders to enter early positions, then push price in a way that traps them before continuing in the direction of their main bias. In this case, we saw a strong retest followed by a break, indicating that sellers were gaining control, at least temporarily. That's why it's crucial to wait for confirmation before entering any trades. Jumping in too early without seeing how price reacts to this key level is one of the fastest ways to get stopped out, and Pieverse is showing exactly why patience is key in trading. So what does this mean for us as traders looking to plan our next move? Right now, the market is in a state where we need to wait for the candle to close and observe how price behaves around the key level. If the candle closes and the price comes back to the former support at 36 cents and respects it, forming a clean bearish candlestick, then we have a high probability sell setup. This would mean sellers are taking control and the former support has flipped back into a resistance zone. On the other hand, if the level does not hold and price breaks it again, we don't panic. Instead, we wait for the retest. When the retest occurs, we watch for a bullish candlestick formation, which would give us a clear buy signal. This strategy allows us to trade with structure, not against it, which is essential in high probability trading setups. So in summary, if the market respects the level, we sell. If it didn't and instead broke it, we wait for the retest and buy. That is all on Pieverse traders. Until then, I will see in the next video.